Welcome to the Not So Fabulously.
So, do you remember, David, when I spent my tuition reimbursement 1 year on a trip to Las Vegas to see Madonna?
I do. We've had some not so fun conversations about that. And as a matter of fact, folks, today's guest has somewhat of a similar story, almost losing his whole down payment on playing the stock market like he was in Vegas.
So, naturally, we had to have him on to talk about money mistakes, and making your finances fabulous, even when things kind of go off the rails.
Right. So meet David Lester, a proud out financial advisor, best-selling author, and TV money expert who's been helping people do better with their money for over 2 decades.
From nearly losing his home deposit on risky trades to founding his own financial services firm, David's a master class in turning your financial missteps into successful money stories.
Thank you for joining us, David.
Thanks for having me.
So there's been a lot of volatility in the market recently, but a lot of people have been advocating for buying on the dips. There's also been some maybe people who have earned the accusations of insider trading. So there's a lot of sense of greed among people right now, along with this all of this volatility. You have some experiences with fear and greed. Can you share that with us?
For sure. Yeah, one of my biggest mistakes, again, was just getting wrapped up in the market. I was a baby banker at the time. I was working at Merrill Lynch, and everything was going up and going perfectly. And I had this nice little nest egg to buy my first place. And I was a derivative trader at Merrill Lynch and I learned how to use options, and there's safe ways to use options. And then like you guys mentioned, there's like gambling with options. And it had worked for a few times until it didn't work. So it was a great lesson to learn, and I luckily was able to recover. But it's amazing how that, even from a professional, that fear and greed, not fear, greed, takes over until there is fear. And it's a great lesson to learn that early on, because I think that if you get burnt later on in life, there can be a lot bigger damage to your finances.
Yeah, absolutely. We're going to dive into the fear and greed here in a little bit. But do you mind, for our listeners and viewers who aren't familiar, can you define what derivatives are and what options trading is?
Absolutely. So options are something that pension funds use, like the teacher's pension and things like that. And there's a way where you have a big pile of stocks. You can use options almost like, and this is what they're supposed to be used for insurance. So if you think that, say soybeans, or for like a big pension or a farmer, they're actually originally made for farmers. And if you thought that you wanted to secure your crop for the future, you can set in future prices or in the future. So it was made to be, an insurance product to secure farmers' prices, or oil. Whenever you see the futures for oil going up and down, same kind of thing. And these traders are locking in the prices, but you can use them in an aggressive way as well. And that's what a lot of people do, especially rookie traders. When you see on like Robinhood and during 2000 or 20, when COVID was happening, everyone was in their basement. They couldn't go to work. They were getting government checks. They're putting it into Robinhood and using it in a bit of an aggressive way. And it basically, without owning, say, like 1,000 shares of GameStop, you can control those amount of shares. And as they go up, you get a much higher percentage of profit from them compared to if you had to outlay all of the money to buy all the shares. It is a bit of a complex thing, but it's when you use a call option and you're buying it, it does mean that you have a chance for it to go to zero, because it's like an insurance product that it's going to expire at some point. Unlike if you had, 1,000 shares of GameStop and they went down half, you would only lose half your money. You still have the other half. But in an option, it's so volatile that even if it goes down a little bit, you could like wipe out your entire investment.
So, all that being the case, I'm sure as a financial advisor, your advice to your clients would be, if you have cash that you want to use the next couple of years, you probably want to put that in a cash position, maybe a high yield savings account, or maybe at most a CD. What made you take on this kind of risk with such an important pile of money that you had?
Yeah, again, it was because in the past I had made, a lot of money from it. So that was a thing. That's how I was able to have a deposit for my home in the first place, was being able to use these options. So again, it was something that it goes well, just like for everyone in, working on GameStop as well. But I don't know if everyone was familiar, but it was shooting through the roof for such a long time, and people were using so many options. They're making so much money. These little whippersnappers that are in their basement, their parents' basement, and were just getting government checks, and we're making all this money. But when it turns around, it turns around fast. So I was kind of sucked into the same idea that you could, once you know it, that it works until it doesn't work, and then it can turn around and rip your face off.
Yeah, sure. Yeah, that can be that adrenaline rush, right? Of watching it do really, really, really well. How did you end up figuring out how to manage that adrenaline rush, that desire to just risk it all, and I guess, and to a certain degree, that grief for that, or the fear of losing it all?
Right. Yeah, I think it was like just that one mistake. So, it was, yeah, when you get burnt like that on one trade, then I've always stayed away from it. And especially with, I would play options in a smaller position, but for my whole position, it was really risky at that point. But I was young, and you know, uh, I was playing the part of all of the bankers that were down there, and everyone brags at the bar afterwards when we leave, our banking jobs, and how much people are making. So it's funny how you can just get into like the social group talk, just like before it was at the bar after we were bankers, and then now it's online. So much easier to do now online because
Right.
people can talk about how much money they're making and what they're doing. So it was, but my lesson was learned after the first time, and then because it's my job, I learned better ways to use options, and there's infinite amounts of investment vehicles. But I'm lucky I bought it. Or I learned that lesson pretty early, because otherwise it could have been destructive if I had just learned it later on in life.
Yeah, definitely. It seems like a lot of that discussion is happening on Reddit right now, right? There's a lot of Reddit threads out there that people are uh, talking about options. One of the things that seems to be driving a lot of talk about options right now too are tariffs, because of the volatility that tariffs have brought. What are you telling your clients about how to manage the risks when it comes to tariffs?
Yeah, I'm actually not I'm a TV financial expert, so I don't actually have clients. But when people ask me individually if they're about options and things like that, with like volatility right now, you get a much bigger premium. I was talking before about it being kind of like an insurance product, and the premiums that you have because of the volatility. It's part of the recipe that makes options, so it is very expensive. Or yeah, it depends if you're buying or selling, but there's a lot of premium. So I think in Reddit, and everyone on the Robinhood account is probably diving in again, because you make so much more money when there's this volatility, and there's the VIX, the volatility index, that's built into the recipe for options as well.
Yeah. So do you think that right now the volatility caused by tariffs is something that individuals can take advantage of, and or is it maybe something that folks should be using as that insurance protection for what's happening with their portfolio?
Right. Yeah, it totally depends on the individual, because we have such different portfolios for individuals. But a good way, like a safer way, if there is a safe in investing, especially now with tariffs and all the uncertainty. But if you sell options, I know this is kind of a complicated conversation, but if you sell options, then you're doing the opposite. It's you become the casino instead of the gambler, for using options. So if you're buying them, it could go to zero, and someone else has collected that premium I was talking about. But if you're selling them, so if you have, 100 shares of NVIDIA or whatever it is, you can sell options higher up. And with the volatility and the VIX right now, the prices are quite good. Even if you have a dividend stock, if you had, a bank or something like that that pays a dividend, you can again sell these options higher up. And of course, you have to talk to your advisor, because this is quite a sophisticated strategy. A lot of it, like I was mentioning, pension funds use options in this way. But if you sell it higher up, then you are getting two renters. So if you see that stock as a rental property, as opposed to an equity, you get a dividend, and then you're putting in another renter when every 3 months or so you're selling these options. So yeah, so it's definitely a different way. It's again another sophisticated strategy. But yeah, that's what old money kind of is. When I was working at Merrill Lynch, all of our wealthy clients would do that because they have these big positions of stocks, and they would go ahead and write options on them when things were going down, and they knew that they would never sell these stocks. So a lot of times you buy stocks, you hold them forever, you collect the dividends. And in this scenario, because the VIX is so high, it's great. You can make another like 3 or 4 or more% every few months just by selling these options and collecting the income. And yeah, and as the stock market goes down, it's providing you more cash to buy more shares or for a cushion in your cash position. So it's really a wealthy client strategy or a pension strategy, or you could do it yourself. But I don't think most retail brokers would apply this to every account.
I appreciate that you kind of correlated this or gave us that analogy of renting it, because we have this, that we hear this saying over and over again: use your money to make money. But you're almost saying use your money that has made money to make even more money, with this idea of renters that are inside of renters inside the renter, with options. And that's a very interesting concept. And I think that's something that folks, if you are interested in, you can dive deeper into that, because it is a great way to use your assets to make more money. We're going to take a quick break and we'll be right back with David Lester. And welcome back to Living Not So Fabulously with David Lester. So, David, let's continue our conversation here, reflecting on your journey with what financial habits did you have to unlearn when it came to achieving your current financial success?
Right. So things I had to unlearn. I'm trying to think well, instead of saying what I had to unlearn, I learned that values and freedom in an individual are what motivates us. So when I was working at the bank, I always wanted to work at the bank, but I have a strong value of freedom. And it was my first day. I had like an amazing outfit and a little briefcase, and I was ready to go my first day after having all my licensing courses. I did them while I was still at college. So I was so excited to start. And then when I got there, I was like, wait, I have to sit in this office, for 30 years or whatever, and then retire. And it just went against my core instinct of having a value of freedom. And so I think that finances allowed me to satisfy my values. And you need to understand what your values are first in order to build a career and your finances all around you. So because working in banking and being licensed in one region for such a long time went against that, I was able to build the career I have now, where I can work anywhere, as long as I have a computer. I'm able to travel, and it satisfies one of many values that I have of freedom. So I think that was the big thing for me, to really kind of smorgasbord a perfect career for me, where I took all the things I enjoyed and discarded the things that I didn't want. And it's all based on your values, on my values, and what makes me tick.
Was there any specific moment besides maybe getting stuck in the cubicle? Was there any specific moment that kind of shifted your values and helped you solidify those in your, not only your career, but maybe in the way in which you use or have a perspective about money?
Yes, I was reading a ton of psychology books. And I think that's the problem with us financial people, is that we always just look at the dollars and cents. And I was trying to read as much as I could about neuro-linguistic programming, psychology, to really come at finance and my career in a different angle. And that's where I discovered values and understanding what values are as exercises to bring them, up to the surface so you can understand them. So it was really the psychological. And there's so many great books out there, psychology of money. Yeah, there's like so many. And I think that that's the great thing about finance, how it's changing now, is that now we're looking at the psychology. We don't just look at the balance sheet. The balance sheet's like the last thing that you should look at. You should really be looking at, what makes you tick, what you want to do. Look at your life, way down, and work backwards to see all the things you want to achieve. Because only then can you, like I did for myself, rearrange your career, how you're making your money, how you invest your money, to satisfy what you want to do through your entire life. And working backwards is a great way of doing that.
Yeah, I thought that you say that. David and I often say that there's an 80-20 split with personal finance. 80% is the finance that, a dollar works the same for you as a dollar works for me. We all swipe our credit cards the same way. But 20% of finance is based on who we are, our background, where we come from, our socioeconomic class, race, gender, such creed, and all that. But also, it's the unique things that we want to achieve. What I want isn't necessarily what you want, and we need to sort of architect the life that we want. And until we know what it is we truly want, and not what everybody else thinks we should want or what we think everybody else thinks we should want, are we able to live the life that we want according to our values? I love how you articulate that.
Yes, absolutely. And even to like 401ks, if you think that you want to retire in Sicily in a palazzo, and going swimming every morning and, wearing a tiny little mankini while you go down there, like whatever you want to do in your future will determine if you're going to have a 401k or if you're going to keep things in cash or like in like a non-registered account. So it's really important to map out your life first. It's kind of like having the mice, like a mouse with a big maze and the cheese, showing them the cheese and then backing them through the maze and letting them go. And then they can, fire off and get it really quickly instead of how most of us do is like just like soldiering on forward and making mistakes and changing. But it really helps to have a complete life and making a list of everything you want to accomplish, building it into your money matrix, and then making sure, and then this is the most important, and then making sure that you're doing, if you have a job that doesn't pay you a lot and you want to do these other things, there's a way to like start your own business like I did, or maneuver yourself if it's freedom. If there's more creativity, there's a way that you can merge creativity. Like now I get to write books and talk to you fine gentlemen. So there's ways to, if you really figure out how you tick, then you can build a money matrix that works for you: career, investments, rental properties, you name it.
I'm hearing I'm smashing pumpkins right now.
So there's a lot of wisdom there. And I'm curious, based on your years of experience, I don't want to call out your age, but with your years of experience, thinking about that line of thought of how negativity can easily creep in and kind of control our thoughts, our emotions, and the way in which we act. There's a lot of fear for folks in the LGBTQ community right now, especially due to politics. So we have a high level of anxiety, and in some cases, some people are just downright scared for their lives, right? So how do you see this impacting the finances of the community, and are there any ways that we can protect ourselves?
Yeah, and I think we need almost our own Reddit. And this is great that you guys are doing this podcast because I don't really know that many other public places where we can just chat and be open with each other around these feelings and fears. I'm really close to my family, so I can talk to them when there's anxiety, and there's so much anxiety, not just sexual anxiety. There's financial anxiety. There's all these different anxieties, environmental, and et cetera, et cetera. So, and you need to really zone into it, and I think we should start more of these financial clubs for us, just to be really open with each other with the successes. I think there's a lot of fronting, in our community, and so we should definitely do the backing. I don't know, that sounds dirty, but there should be something else that we can get together, just like really be honest with people that are uh, feeling nervous and don't know where to get started, because it is intimidating for anybody to walk into like an advisor that's just trying to sell you some dumpy mutual fund, or you open a business account. Like if you have a special idea that's so unique, who do you talk to? So I think that definitely, I love that you guys are doing this podcast, and we should really open it up to so people can really easily find these, um, a business Reddit or wherever.
Thank you so much. As we wrap, our last question for you is: what's one piece of money advice that you would share with the LGBTQ plus community today?
The biggest one is for the long term. I think that it's funny, after all of the, I was mentioning that I was a Merrill Lynch. I worked in worked in derivatives for a while, and then I've moved into these different areas. But if I had just pushed, like, just did contribution, when I had graduated college, and it was just like, it probably would have made me more money than me like doing options and, having rental properties and buying art and all these different things. So if you don't want to go into these different areas, I do love it. So it's like, it's a bit of a passion for me. But, if you just do these monthly contributions into something easy like SPY, it's just like the whole S&P 500, or QQQ, which is like the NASDAQ, and just do monthly contributions. You could be the whole Thurston Howell the third on the yacht with the cigar and the champagne, while the rest of us are hustling and doing these other things. So I think that you can make a lot, and I've seen it happen. And these people that just set it and forget it, and as you get a raise, just increase your monthly payment, and you'll be set in the long run without all the gnashing of teeth and and angst that everyone else is going through.
Yes, I love that.
Sharing that.
Yeah, I love that. It's just sometimes the slow and simple, and we do know that the data is out there that I think it's 80% of millionaires are millionaires because of their slow, consistent contributions to their 401ks. So,
Thank you for joining us, David. We appreciate having you.
yes,
With my advice,
yeah. What's your takeaway?
I think we don't talk about this enough. We don't. I think the slow, consistent, boring investing is wealthy investing, and the sooner you can start that boring investing, the better. I think we get, especially in this kinds of market, we get all excited about all these exciting different products and strategies, and just start young and invest boring.
Yeah, I think mine is your comment, David, about values and understanding what our values are as early as we can, because that will really help us through times of volatility in the market, times of volatility in our own lives, and how that affects the way in which we spend our money, use our money, invest our money. And I think that's really important because then it makes that anxiety and stress a little bit easier, because we know the decisions that we've made, even though they may not always be the most financially perfect decision, it still aligns with who we are on the inside. So thanks for tuning in. If you like what you see, scan the QR code and follow Yahoo Finance podcasts and more videos and expert insights, because when you do, it keeps your house deposit where it belongs, in escrow, not in an emotional trading day. So until next time, stay fabulous.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.